Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's special guest is Joseph Gradante, and he is the co-founder and CEO over at Alio Capital. Joseph, welcome to the show.
What's up, Adam? Glad to be here.
Oh man, glad to have you here, and we got a good topic. So I definitely want to get into Alio Capital and also get into your background and really how you got started in finance. And I guess just to get us kicked off here, I see the word co-founder. I'm a co-founder myself. What got you involved and what inspired you to start Alio Capital?
Well, I graduated during a Great Recession, and it was a difficult time. Always thought I was going to have this easy track in finance growing up in Manhattan, watching some of my family members, in the industry. And then everything blew up in 2007, 2008. So I think entering the industry at that time gave me a unique vantage point. And obviously there were a lot of shifts and fintech started to form. And so I got to watch it from its nascent stage. But as I continued in the industry, I collected multiple vantage points and really wanted to take those vantage points and bring them introduce that to the general public. And that was kind of the inspiration behind Alio.
So you don't know this, but some of my long-term listeners may have heard, but not our newer ones. So I started in finance. I was in finance almost 14 years. And a funny little fun fact about myself or for the show is my first day working at my very first firm was the absolute height of the market in 2007. The exact day. I can look on a bar chart, find the day based off of that, and from that point on, it went down. So I was like, I don't know if I caused it, Joseph. No, I'm just playing. But if I was bad luck or I jinxed it, no, just messing with you. I'm curious, what was just for the younger audience or those that didn't exactly live or grow up at that exact time, and actually just for myself, because you were in the heart of it. I was experiencing this for context. I was in Scottsdale, Arizona at that point, working for the Vanguard Group. So I was in a different world of finance and a different area. What was that like for you? You were in the heart of it.
Yeah, it's an interesting question. The first company that I was with, I entered with was Cantor Fitzgerald, and it lost the most people in 9/11. So it was really, when I think of the journey of Alio, it's interesting that I started there, start point and end point, because I think 9/11 was really the start of this rise of big government and the deep state that really had all these greater implications, right, for the economy in the long run. So to start out at Cantor and get that unique vantage point and then end up on the buy side as a macro strategist, trying to, take that political angle, because our mission in Alio is to really promote economic literacy, right? And so that's the catalyst behind macro investing. But yeah, basically, the best way I could sum it up in short form is I got into the industry. A lot of the guys that were sitting to the right and the left of me were making seven figures as traders and brokers. And that world went away so quickly with the rise of big government. And I think a lot of young people today, they didn't get a chance to see capitalism in its purest form. And so I think that's why a lot of them don't believe in it. And that's why that's one of the catalysts behind building Alio.
Man, I love that you bring that up. And one other just quick fun fact. So when I was in high school, I worked for Raymond James. And before I did graduate before the tech rat kid, I said 2002. But when you said looking at the guys to your right and left that are making seven figures, I remember back then it was 98 time period-ish to 2000. You just put money in the .com and you're making money, right? They put .com at the end of anything and you were doing something. I was like, oh, that's how you make money. It's so easy. That's what you invest in, Joseph. No.
Yeah, I thought life was going to be so easy. When I was entering college, my friends were making seven figures their first year out. And I was like, this is going to be a cakewalk. My life's going to be great. And 2008 changed all that.
All right. Enough licking our wounds. So your original thesis, or I shouldn't say your original thesis, but for Alio Capital specifically, as a strategist and thinking about making investment decisions based off of interplay of elections, policy, economics, a lot of different routes that you could have gone or different theses or different angles that you could have gone. Why this, and why was this something that you felt so strong about that you'd be starting a firm based on it, number one, and number two, just know that this would be a direction you take in life?
Well, because when I look at fintech, right, and I think of there's really it's bifurcated, but we'll start on the left side, which is the more popular side, the trading apps. 92% of people are losing money there, right? And it's because they have this bottom-up approach to investing. And my uncle, who had started the fund and was involved in the early formation of the hedge fund industry, I came out of college with a degree in economics, political science, and public policy. So he taught me the macro framework, and I really didn't know anything about fundamental analysis. Yet I noticed that my portfolios were doing better than a lot of the CFAs, if you will, that were looking just at fundamentals, strictly because I understood the geopolitical landscape and I could pick asset classes and sectors based on how geopolitics was setting that up. And now, we're in the ultimate macro climate. So I didn't know that when I was starting Alio, that it would play out so strongly. But that narrative has continued to play since, artificially low interest rates that were introduced as a result of the Great Recession. And I think there's so much opportunity. I'll just give you an easy example, right? Like Trump gets elected, proposes these 145% tariffs on China. The market panics and it sells off. So now you have all these stocks and ETFs that are super cheap, and yet there's no underlying economic weakness to support the devaluation, right, of these companies. And it was just panic. It was just based on psychology. And so if people understood the way that geopolitics move markets, they can exploit that and reap the gains. And I don't think the current solutions today in the market really set people up for success. I think they actually position them for failure.
So speaking of Trump, do you think his presidency has the opportunity to restore or help American prosperity versus hurt it? Like where do you stand on the issue?
I don't think there's any debate. Help it. I think, America's going into its 205th anniversary, and we are extremely fortunate to have Trump as our president. And I think a lot of young people haven't had a chance to experience what's coming in the Trump presidency. But if you just look at $5 trillion of new investment, this reconciliation bill, will either create or save, up to 8 million jobs. You're talking about up to $12,000 more annual take home per individual, $13,000 per family. So I think, it goes back to Calvin Coolidge's quote, "The business of America is business." And yet that's been taken away from us on a lot of levels. And I think the Trump presidency is going to just introduce this climate of rapid growth and innovation that's going to help the younger generations really not just learn, but experience what it truly means to be an American.
And that concept of like the prosperity and like what I said I would be done looking at, like being like sad about 2008, but what you talked about, and it takes me back of the possibility of what you're saying right now, like graduating, and you didn't say this, I'm saying this, graduating college when there's an upswing of potential and of new things happening and new investment and new opportunity versus, when I graduated and we were going into the housing crisis, and it was not a very trusting time for the market, and that whole pocket of generation is kind of lost for certain things in terms of years. So if the things play out like they could in this current cycle that we're in, man, what opportunity for our youth, and not just our youth, but those that are participating in the market. Do you agree with what I'm saying, or am I off on anything?
1,000%. I think 100%. A rising tide lifts all boats, right? Yeah. And so fiscal policy, this goes back to the core of macro investing, which is, understanding fiscal policy and monetary policy. And I think, a lot of people have been indoctrinated in the higher learning experience to believe that somehow government is going to be the solution, to our problems. But history has told us that government is rarely, in fact, for the most part, never the solution to our problems. The solution to our problems is human ingenuity, but you need macro conditions to foster that ingenuity. And so when you look at something like the Trump administration is introducing in the form of deregulation and tax cuts, that is a net debit to the country in the sense that, now you're unleashing all this capital, which unlocks the animal spirits, and that leads to jobs. And ironically, believe it or not, it also leads to the social programs that, many of us care about. There's actually more money coming into the government to pay for those social programs. So it's a net win on so many fronts. And the last thing I'd say, even, shutting down the borders, I mean, from that perspective, at least there's a finite number of people then chasing X amount of jobs. And so workers can get higher wages because they're not being undermined by this cheap labor. So really, it's a win-win on all fronts. We haven't seen anything close to this. I mean, think of the wealth that was created in the 80s and 90s, right?
Yeah.
When Reagan and Volcker introduced their policies. This is what I'm alluding to with macro investing and the importance of history, because you look at what happened then, and I think, this wave could be even bigger than that wave. And people have to be in the market, like you said, to be able to take advantage of it. And by market, I mean in the economy. I don't necessarily just mean the stock market. So it's great to be there as well.
And I don't want this to come across as a loaded question, especially for my audience. I want everybody to understand that at the end of this, I'll give Joseph the opportunity to leave websites, contact information, things like that, so that you can follow up questions. You can ask about your direct situation. But in general, Joseph, what are some themes that investors that are either in the market or not in the market, what should be on their mind right now? What should they be considering?
Again, not to tie in this macro investing theme, but I think what we're seeing right now is you want to have a combination of risk on and risk off assets. And so, the innovation that I just mentioned, you're going to see growth in tech. The deregulation is going to lead to growth in finance. But I think you always want to be prepared for a potential black swan event, because there's things, outside of the administration's control. I mean, you look at the China-Taiwan situation. So I think gold, risk-off asset, Bitcoin, having these hedges built into the portfolio. So, that's what we're seeing in that context.
Yeah, it's great. Yeah, I think I have to agree with that. And what comes also, I like that you bring up the black swan side of things, is just seeing I think one thing I'd add to it is also just, not saying you left it out, but just a consideration is just thinking about what your actual goals are with your investments, right? Just thinking about how everything works together and what your plans are for that money, because it's not always, like you said, risk on, risk off, right, situation, but it's not always about milking every bit of return. You got to make sure you're safe still, that you're investing towards your objectives, right?
Oh, 100%. I think, on that front, I would add, and this goes to the right side of fintech, a lot of the so-called robo-advisors, they offer these 60-40 portfolios. And certainly, I mean, if your goal is to take your money out in a 5-year time frame, you might want to minimize volatility. But I think in general, younger people should have a lot less exposure to bonds, because, again, all things equal, and all things are never equal. So I'm speaking in generalizations here. But if you're younger and you have this, you're fortunate enough to have this 30 to 40 year outlook on your investments, well, then your goal should, for most people, right? Everybody's different. But for me, it's growth and it's always growth. And therefore, that's why I'm alluding to that perfect combination of risk on, risk off assets, where you have some hedging in there. If things shift quickly, you could take advantage of that, with something like gold and Bitcoin, as opposed to, say, an asset class like bonds, which are more designed to minimize volatility, but are positively correlated to equities. So I think, their use in portfolios has become, it's a lot less important than it was when Markowitz came out with modern portfolio theory.
Well, Joseph, this has been great. If somebody's watching or listening to this, and if they want to follow up, they want to connect with you and learn more, how do they do that?
Yeah, AllioCapital.com. ALLIO, AllioCapital.com. You could also check us out in the iOS or the Google Play Store. And
Perfect. And for everybody listening, just so you know, we'll definitely put those links in the show notes, so you can just click on the link and head right on over. And speaking to the audience, if this is your first time with Mission Matters and you haven't done it yet, hit that subscribe or follow button. This is a daily show. Each and every day we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So again, hit that subscribe or follow button. And Joseph, thanks again for coming on the show.
Thank you, Adam.